What is up? What is going on, everyone? Happy Wednesday, hump day, or whatever you want to call today. But we're back with another Deal Makers Club, and we have a special guest today. And for all you guys that are connected, whether it's LinkedIn or YouTube, make sure you subscribe to my newsletter. Number one, that we have some great newsletter articles that have come out over the past week, with one diving into the U-Haul data, with Texas retaking the number one spot for inbound moves. And so I really broke that down and what that means from a institutional landscape and an investor on job growth and population growth that's going into Texas, but then also Florida's right there lingering at the top. And you usually have the same usual suspects. But one of the new additions that I really highlighted, and of course I am a little bit biased, is Alabama made the top 10 list, moving in at number 9. We have both South Carolina, North Carolina in there as well, and Tennessee. And so the Sun Belt continues to kind of turn the headlines and lead the nation when it comes to growth. And of course, on the back end, with those losing population, you have California, Chicago, and New York kind of leading that out at the bottom of the list. But make sure you guys stay tuned in for all the content that we're dropping, as well as supporting and helping the credit investors and real estate investors in particular. That if you're looking for a financial advisor and you're looking for advice around a 1031 exchange, then I would welcome the conversation to help you get clarity around repositioning that capital into the right asset. And so we're having some of those conversations on a daily basis, and would love to be a resource for you. So with that, today we have AJ Washington, the founder of Float. And so Float is a creative asset management platform built to help artists unlock long-term value from their music. So prior to Float, AJ spent 11 years in credit investing at PIMCO and Providence Equity Partners, Wall Street, after beginning his career as a nuclear engineer in the U.S. Navy. He holds an MBA from the Wharton School and BS in systems engineering from the U.S. Naval Academy, where he was a 3-time boxing All-American and graduated with merit, top 15%. So with that, let's bring AJ to the stage. Welcome, brother. It's great to have you here on the Deal Makers Club today.
Johnny, thank you for having me, man. I'm really excited about this and love what you're doing in general.
No, I definitely, it's a pleasure having you here on the platform today. And I always like to ask my guests, what's the one thing that you want the audience to know about you that's not on the bio?
Yeah, it's funny because I was gonna use my my 3-time boxing. Most people don't know that about me. From I haven't boxed since college, but since that was in the bio, I'd say I guess the thing that's really pertinent to this is my mission has always been to generate wealth, and I've always understood that assets were the way to do that. And I have a love for income generating assets. I actually started out my career investing before, while still in the Navy, investing in real estate. That's how I funded my Wharton education, was as a real estate investor. And so, I think as I tell my story and show the opportunity today, you'll see the through line of me, just, someone who loves income. I went from real estate to fixed income and credit, as Johnny mentioned, now to music, which is just another form of, income asset. So yeah, I'm excited about this.
Yeah, no, most definitely. I know when we had the conversation a few weeks ago that I was definitely intrigued, and really, coming from a alternative investment mindset, and really here over the last year with making that pivot as I transitioned out the Air Force. And so I was at Howard University last spring, and there was a graduate that had came back presenting at Asset Management Day that was working working within a fund that was in the music IP space. And so we were talking, I was like, oh yeah, I got to get AJ on here to kind of break this down and share with the audience, because a lot of times we only gravitate to what we know. And a lot of times that's the traditional investments with it. There's nothing wrong with that.
Right.
But there is a large amount of alternatives out here that, today, compared to in the past, that are even more accessible than ever before.
Right.
So I think this would be a timely conversation right now with everything that the current administration is doing in regards to executive orders, with they have a lot of smart people within the SEC looking at how to expose alternative investments to the everyday investor outside of just the accredited investor space, but now really looking how can the pension plans and 401ks
right.
in alternative investments and private equity. So I think this is right there and timely for everything that's happening right now in the economy.
No
So
doubt.
with that, man, oh, go ahead before I
Yeah,
turn it over to the presentation.
and I think this is how we can jump in, but um, the important part of investing in general is diversifying. You got to diversify your sources of income, and so if you have a huge real estate portfolio, one of the things you can do is diversify into other forms of assets and asset classes. And the thing that is very strong about IP that I'll say this probably a couple of times on the presentation is that it's uncorrelated to any business cycle risk, any macro risk, any equity risk or stocks and bonds. Are very low correlation. As you know, music is a key part of cultural infrastructure for us. We will always listen to it, and as a result, it will always make money. And as you mentioned, the tradition in music, especially around investing in it, was that it was always reserved for institutions and just hard to access. But like you mentioned, those walls are coming down, and a lot of access is being democratized so that we can now invest in music in a whole new way.
Most definitely, I agree 100%, and I think that's one of the things that we're seeing. The landscape is continuously shifting with technology,
Right.
with a lot of the barriers being brought down in regards to how you can set up a fund. How was it before we get into the presentation for you? How was it from you transitioning from Wall Street and from that side of it
Yeah.
to now going out as an entrepreneur? Because I really, being an entrepreneur, I know a lot of times we think different than your engineer as well too, and a veteran, because I would say a lot of veterans, we're thrown into the space where you have to lean on leadership at a young age and you're given a lot of responsibility. So how did all that play into you kind of going out and creating a
Yeah.
company?
Look, it's been a long transition. From graduating from the Naval Academy, and I graduated in 2001. April 4th, September 11th happened. So I was in the Persian Gulf. I was on a aircraft carrier, and my first interview ever was when I went to business school. I had never had to interview. So first lessons, and that was really my transition, was business school. But my first lesson was selling yourself. You got to take that humble sort of cape off and really be able to promote yourself and sell and do it in a value added way. Obviously it's not self-promoting, but I think that was the first thing I had to learn, honestly, on Wall Street and in the corporate environment. And I think it served me as an entrepreneur. Just you have to be selling. You have to be able to do that. You don't have to do it all the time, but you have to be able to turn that on when you need to. I think the transition for me also happened over the course of Wall Street. And so, the thing I mentioned at the outset is that I love investing. I've always loved investing even before I was on Wall Street. And one of the things I loved about, working in credit was that it was a very esoteric part of asset management. At the time, and most of the world thinks of the equity markets as the dominant market, but actually the bond market is larger and it's more sophisticated and it's more based in math. And so, learning that really allowed me just to have this new perspective on assets in general and understand all kinds of assets, because at the foundation of every single asset class, including real estate, is income. And that's how you price, real estate, is based off the income that it can generate. That's how you price equities. That's how you price everything. And I think having that start in fixed income really, really helped. And then, what it allowed me to do is understand the value in music and understand that music is highly undervalued to the point of being extremely cheap as a financial asset. So if you think about music, music generates income. Most people think there's no money music, but the reality is music is just under monetized. And this is me, again, bringing my investor hat into this, but thinking that, music is so unique in that it pays perpetually. It never goes out of business. It will never go out of business. It doesn't have any sort of risks associated with traditional assets. And that in itself is unique. The other thing that's unique about music is that it can replicate itself. A bond cannot replicate itself, a house cannot replicate itself, but music can turn into more.
Right.
An IP in general can turn into more IP. So you start with an animated series, and you have a toy, then you have a cartoon, you have a movie, you have a theme park, and you can continue to layer on different revenue
Mm.
on top of IP. This is very unique to IP. And music, same thing. You can layer in licenses. You can license to gaming. You can license to TV, movies. Now there's AI licenses. There's 45
Okay.
generative music platforms that want access to music that they can fairly train on. And so now there's a whole new crop of licenses. And so think about a house where you can put multiple tenants on, or maybe it's more like a cell phone tower where you can have multiple tenants on the same tower. Each music
Okay.
has that same quality, and a music catalog has that same quality. And no one is really operating in a way that maximizes the value of it. And so, what really attracted me, again, away from the world that I was in to the world of music, was this thesis that music is just super undervalued, and it's also very, very valuable. And so, if you can sort of unlock that value and more of the value, there's a huge opportunity that exists. And so that's what we're doing. And so I think that's probably a long-winded way of saying like what drew me to the opportunity. But then, entrepreneurship, just back to that side of it, it's been a journey for sure in understanding, people, and this is not the military. The world is not the military. Everyone isn't, reliable, dependable, has your best
Right.
team oriented, and may not operate from that mindset or that moral stance. But what I guess I've really gotten good at and learned how to do and realized was that when you meet good people, you bring them close because they are rare. And so I'm happy. I'm so thankful for the foundation that the military gave me, and even Wall Street, had its own code of ethics that you had to live by, and it's served me well as an entrepreneur just to be able to navigate the world of entrepreneurship and do it in a mission oriented way.
Yeah, no, I love it, man. That's phenomenal because I know everyone has their journey, and I think as a founder and as a entrepreneur, that a lot of times people resonate with the story,
Yeah.
and a lot of times they'll see the organization, but they want to understand the journey that got you there and being in the process to get there. So I always like to get a little glimpse behind the scenes and kind of the story and the individual, and a little bit of the challenges that got you there. But no,
Yeah.
I think this is good. And really, would love to love, as I know the audience would, to learn a little bit more about Float and kind of dive into the thesis.
All right, cool. Let's do it. So I want to present here if I can. How do I pull these slides up?
There you go.
There we go. All right. So this is today we're talking about how music rights generate long-term income. I introduced myself. I don't need to, harbor on that anymore, but we'll also, and hopefully Johnny, you'll help me do this, share the slide deck with, in some way. So we can figure out a way to do that. But yeah, this will be
Yeah,
available.
no, most definitely.
Available maybe on our social media or Twitter or something if folks want. And my contact information is at the end. So anyone who wants to follow up can always contact me on email. But I start with this quote. I found this quote: "Intellectual property is the oil of the 21st century." This is by Mark Getty of the Getty Foundation, Getty Film, Getty Photos. You guys may be familiar with the name. But what's interesting about this quote was that he said this in the year 2000, before even the dawn of the internet had occurred. And as one of the biggest opportunities that has emerged for us, especially changing the media landscape, has been the internet. And you think about the Napster era in music and now streaming, and think about just how, when in the year 2000, a lot of us were still watching cable. Today, most of us are on YouTube and consuming there. So, this is, I think, even more powerful statement than he intended it to be, really based on the timing. But again, back to why we're here. The goal here is to generate wealth. I think that's what we're all in the game playing, or that's the game we're playing. And as the age-old philosophy on how to generate wealth is to collect assets that do three things: produce yield, appreciate in value, and offset expenses. And Traditionally those came in 3 buckets. Johnny mentioned at the top, real estate's one of the biggest, 300 trillion global market. Dividend paying equities and bonds and credit are the other 2. Intellectual property and music rights have not yet been a core part of an allocation, but as we mentioned at the outset, that is definitely changing. Music rights is emerging for a couple of reasons. It's institutional capital is attracting billions to the space and allocating it, making the space mature, and a lot of that's being fed by the fact that streaming has created transparent revenue and revenue visibility for music that it never really had before in the age of CDs and albums and physical copies. So with that transparency, the value of music has increased, and it's also now been matured as an asset class in a way. And I think the biggest driver of what's created the growth in this space is that there's just more creators making more music, and that there's actually more music being made now with the addition of AI. The chart at the right shows online music creators in millions. In 2025, there was a little bit over 120 million. By 2030, that is likely to go up to 220 million. So think about that just in terms of what types of opportunities are going to be available in music and how much music is going to be made. And a lot of these numbers were made even before the AI boom. And so you could probably put another 20-30% on these figures today. So how does music make money? Like I said, there's the nice thing about music is that you can layer on income streams. So there's traditional streams of income like streaming royalties, licensing, like I mentioned, for TV and films and games, performance royalties. So anytime a song's performed, the rights owner gets paid for it. Mechanical royalties are for any electronic plays, radio plays generate mechanical royalties. And then the last is sampling and derivatives. And this is a fairly new part of the ecosystem for music and how it can generate money, along with AI training, like I mentioned at the outset. But sampling and derivatives, most music today is made with samples. This really stems from hip hop and electronic music. As we know here, that music has always been very sample based. And now that's really pervaded all music. Most music, I'd say, especially popular music, is made with samples and loops, and so there's another way now that artists can monetize. It can not only release finished songs to platforms to be consumed, they can also release loops or ideas that other people can build on, and that's really how Float, when we get to it, differentiates itself. So why are rights attractive? And here, understanding that this is a real estate crowd, I try to cater a little to what about real estate. But here's the sort of the downside of real estate and some of the attributes. It's a physical asset, which is good in terms of it underpinning risk, but it's physical, which means it's a local market, is only accessible to it. It requires maintenance. There's tenant risks. It's leverage dependent typically, which is a good and bad thing depending on the cycle, but it is cyclical. As Johnny was mentioning the macro trends and outlook, at the top of this call, a lot of those trends drive the value that is created by real estate. Population growth, job growth, the economy in general affects real estate pretty closely. Music rights, on the other hand, they're digital. There's global demand, no maintenance, because they are digital. So you don't have the same risks and downside that you have in a physical, with a physical asset, especially one like real estate. Again, there's perpetual cash flows and low correlation. The biggest thing, and I see a spelling error, so I'll fix that, but is that they're replicable. I mean, again, music rights and music assets can replicate themselves through derivatives and remixes that only make the original song more valuable and now grow the catalog sort of infinitely. And then again, the other attractive part of music rights relative to real estate is that you can continue to put in more tenants. More and more tenants onto this asset just creates more and more value, really without limit. And so the institutional capital is already here. These are some of the headlines from deals, not only from music industry, uh, labels that you would expect to be buying catalog, but from large institutional players like KKR and Blackstone, Warner Music, uh, merging or creating a JV with Bain Capital just for the purpose of acquiring music rights. And so the institutional guys know this. The big boys are here. They see the value of music rights, and they are putting billions of capital to work in the space. The downside, sort of music really has always been that it's complex and it lends to needing an institutional sort of pedigree to understand, and access has been historically limited to institutions. But like we said at the outset, a lot of that is changing, mainly because again, the creators are exploding online, and I think that trend will continue to happen. And what's starting to happen is creators are seeking alternative forms of capital. They no longer want the label deal. They no longer want to go to a Hollywood studio and have what has historically been pretty hostile deals to them. And so now you're seeing a whole new ecosystem of funds and companies growing and being built, really to satisfy this demand for capital from creators. And so if you think about the average creator, whether they're making music or film or TV or animated series or toys or any sort of art design, um, they are entrepreneurs, and typically they don't have access to typical channels that entrepreneurs do, like venture capital or accelerators, things like that. A lot of creatives, even who are making animated series and series and film, have to rely on grants. And so there's not this, financial ecosystem around them ready to support them, or there hasn't been traditionally like there are for entrepreneurs. But a lot of that's changing. I think because of that trend changing, that's really what's causing the opportunity for the retail investor. And so institutions are here, they get it. But these new companies and funds that are forming are going to be appealing to the retail investor or accredited investors, on the side of funds. And so here's what we built. This is our take on this new space and new opportunity. Again, this is infrastructure that we built that's really informed by my background in finance and my perspective that music is undervalued. But we've built infrastructure. We think the next phase of opportunity for labels is to serve as infrastructure for artists. And labels really are meant to do two things for artists: give artists visibility and make them money. And so we built a platform that allows that to happen. And the way we work is artists are able to release music through us. We help it make money, and they keep more of it than they would if they went to a traditional label. And so we make money in three ways: from subscriptions to our site that allows remixing, through licensing, which again we can layer more and more on top of over time, and downstream derivatives. So again, our catalog is positioned to be remixed and grow, and because of that, it enables us to create remixes at scale. And whenever we make more assets, that's just more more employees, so to speak, that are working on our behalf and generating money through streaming and other means, and growing the catalog, and also unlocking additional licensing opportunities. And so all I'm putting to really is this new function of a company, not only in providing artists a fair way to earn money and more money than they could otherwise, but give investors a way to share in some of those royalties and revenues. And so the reason why we are structured as a company, there's a few, but one is so that we could be available to a retail investor who may not reach accredited investor state, which we would be required to invest through if we had a fund. And so again, we are not the only folks doing this, but there are other emerging companies that are positioned like we are, that essentially work as sort of pass-throughs through music and music rights to an investor base that wants exposure there. So some key takeaways here. These are the key takeaways as, according to ChatGPT. But, relative to real estate, music, as I mentioned, is super attractive. No tenants, no maintenance, no refinancing risk, no geographic concentration, perpetual global demand. Again, low correlation to business risks or cyclical risks that are associated with real estate, and recurring revenue stacking. Again, it's a pretty interesting opportunity when you can continue to not only replicate assets and create more, but then stack additional tenants on top. And that's just a reality for music and IP in general. So excited to have given this chart, this talk. This is the first time that I've delivered this presentation, and so maybe I'll stop here and see if there's any questions.
Yeah, no, this is great. Kind of walking through, and yeah, my mind is really, being a novice and looking at this. So, how does an artist like track? They upload to maybe Spotify
Yeah,
or to Float, and so how do they monetize that or track? Making sure that they're getting paid, or the different radio stations are
right.
spinning their record per se. How do they actually track that monetization?
I'll say the old way was, and still the current way, predominant way, is you register the song with what's called a PRO, Publishing Rights Organization. And what they do is, once you register the song, gets an ISRC code, then it gets tracked sort of wherever it goes across the internet or on the radio.
Mm,
And it's up to these performance rights organizations to then track those plays and collect the revenues that are due and pass them back through to the artist. Now, there's a lot of leakage in the system, as you can imagine, uh,
okay.
and different jurisdictions, and uh, there's different rules in each jurisdiction and different governing bodies that you have to register a song with, or you're not going to get paid in that arena. And then you have things like, a borrow play a song, and technically they're supposed to pay out to an artist, but that may or may not happen, or a public performance happens and that may or may not happen. What's happening now, though, and I think what you're going to see next, is AI doing that job and doing it more
Mm,
efficiently, because it can now track music wherever it goes around the internet. And so we're talking to a company for us that does something called AI watermarking. And so it'll put a digital imprint on the content. And then if it, wherever it shows up around the internet, we can see it. And if we can track it, then you can get paid on it. Even if someone's performing in a bar club and someone
mm.
records it and puts it on TikTok or puts it on Instagram, then we will be able to see it. Right. So, so that's the new way. I think that you'll start to see it more efficiently occur, just with AI watermarking and tracking.
Okay. No, that makes perfect sense. That's always been what I thought about. I was like, well, you put your music out there, but how are you tracking it,
Right.
to make sure that you're getting paid
Yeah.
and doing that? So really, like for you, what's the next step kind of going to 2026? We just kicked off the new year. Kind of what's your vision this year for the company?
Yeah. I mean, we're just going to continue to grow the music catalog and grow the creator network. We have the piping built, we have the platform built, we have the agreements in place, and now it's just, we're down and ready to build it. So for us, this is a asset management game, in a lot of ways, and assets are at the core of this, music assets. And so we have access to some pretty big name producers who, for us, we can approach them and say, hey, we have this platform that allows you to unlock new value from music that's sitting idle on a hard drive right now. We think you can generate, millions of dollars with this. Are you interested in, in working with us? And we're having a lot of doors open. So, I'm excited to have more of those conversations and maybe continue to do talks like this. I think, this asset class is one where, especially for, the Black community, we can now monetize our taste in a lot of ways. And
Right.
uh, and I think, look, we're the most influential culture. When it comes to IP and music, we really dominate. And so if we're able to now support, Black creators this way, and also capture some of that upside, then that's amazing. And so, I think this type of lecture series is going to be super important, maybe, more than I thought it would, just to help people understand the opportunity in IP in general. But yeah, this is all systems go for us for Float this year. We're excited to launch and relaunch the platform and grow the creator community and really do something disruptive in music.
No, most definitely. I think it was a conversation I was having with my kids here recently while they were out of school the last week. That really break it down. Essentially, you look across society and you have like three tiers that people kind of boxes that people can fall into. Where you have consumers that are just there to consume, where you're looking to buy things, not necessarily buying assets, but just consuming and using income to consume whatever the latest thing is or thing that you think that you need. And
Right.
then from there, you have employees that are producing those different services and products that are there for people to consume for the business to make money. And then that third tier is the owners and the investors that are have the wherewithal to build a business, to build the infrastructure around to produce a hamburger or
Right.
to produce a financial service or a financial product, or a company of this nature to buy music IP rights for streaming rights. And that's the thing that I was passing on to them was like, hey, you want to be able to invest in the company where if you're a consumer and you're wearing Nikes, but you're also an owner of Nike stock,
Yeah.
where now you're buying the product and everyone else is buying the product. But guess what? Now your ownership is going up in value. You're putting a little bit a piece of that back into your own pocket. And I
Right.
think with music that I see the direct correlation with that, the same thing where you're streaming your
Right.
music, you're a fan of artists, a fan of music, but now you're an owner in the game now with owning rights. And so I think this is a really great opportunity to just expose that now to the everyday American or really the everyday human across the globe because it's nothing that really ties into just here in America.
The opportunity is here, and it has not been here before, really. And so, I think now it is time to pay attention and to just explore it, and just understand it. Because again, it's not too dissimilar to income or any income oriented strategy, whether it's bonds or real estate or other forms of IP. Like IP is now a part of the should be a part of the mix in the conversation, because it is accessible, and especially when I talk about music, it's very 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 attractive right now, given what streaming has done essentially to the valuation of music.
Yeah, no, 100%. And one of the things that came up when you said uncorrelated, really pointing back to I know Tony Robbins wrote a book last year about the holy grail of investing, where he sat down, interviewed a lot of private equity, a lot of founders and billionaires, and
Yeah.
he ended up with the holy grail of investing is finding seven uncorrelated investments that you're diversified across. And I think, like you said, music is one that's uncorrelated with everything else with stocks and bonds and the
Right.
economy and that. And so, and I think you laid out those reasons why. And yeah, so I think it's something definitely that be warrants to pay more attention to going forward. And what's like the best way for people that may be interested in learning more about you, about the
Yep.
company, and the things that you guys have going on in 2026? What's the best way to kind of stay in tune with everything that you're doing and float?
Yeah, if people want to reach out with direct questions, they can hit me at aj@float.co, PHLOTE. On LinkedIn, I'm at AJ Washington on LinkedIn, or at Team Float, which is our Instagram, TAMPHLOT. And again, this is all here in the document. We'll figure out a way to share it.
Okay. No, I think this is great. And by all means, definitely, if you're interested in learning more, reach out to AJ or shoot me an email or something if you want to get the copy of the slides, and we'll share that as well too. And that's what this is all about, man. So I'm super excited and glad you were able to make some time to come and
Yeah,
share on
that's
the platform. And yeah, hopefully look forward to having you back on here and maybe get you the name, drop a couple of names. I know you're working some things behind the scenes, but I think that'll be super dope
cool.
as those things rolling in and just keeping people informed. And
Yeah,
then, yeah, and just being able to be a resource.
yeah,
And as
yeah.
I say, spread the gospel.
Yeah, I'm happy to do it again anytime. And this is a space that's evolving pretty rapidly right now, especially with AI and AI content. The whole media landscape is really fascinating to follow. And so, yeah, happy to come back at any point, just give an update on my perspective on what I'm seeing and sort of what's happening. I think there are some trends that we'll start to see that, yeah, maybe some interesting opportunities that, folks here will really be interested in. So, yeah, happy to come back anytime.
Awesome. Well, no, this has been great, man. And for those that are watching, hey, this is what you get here on the Deal Makers Club. That we're bringing on great founders and great investors and giving you guys the insight and information to become the best CEO of your last name, because that's our mission and our goal for each and every one of us. So we will see you all next week. I think we're going to have another treat. We're going to have a private equity founder that focuses on real estate coming on. He's a veteran as well, too. I hang around a lot of veterans, go figure. But Army veteran, foreign, he operated in, I guess it wasn't necessarily foreign military sales, but it was a foreign officer. And now coming on board, taking that skill set, bringing it to multifamily. And now most recently here within the last couple of years, stood up his own multifamily fund. And so we're having some great conversations. So make sure you guys tune in next Wednesday. And let's go. Let's make some equity happen.
Thanks.